Good evening and welcome to tonight's webinar, member-only content, where we look at ASX investment opportunities in review for the 14th of June. Any individual reading or listening to this should discuss with their financial planner or advisor the merits of any recommendation or offer presented in this material for their own specific circumstances, and realise that not all investments are appropriate for every individual. Investor Signals provides a broking account service. If you'd like to know more about it, please contact me on 1300 614 002. The technology I'm using tonight is the Investor Signals member area. You can subscribe to it for $1,320 for the year. If you're joining us as part of your 30-day free trial and you'd like more tuition on how to set the software up or the member area, please don't hesitate to give me a call on the office number there. This evening I thought we might just take a slightly different approach. The prior weeks have been toggling through the ASX 100. I just wanted to share with you some of the stocks that are in my watch list, and then we'll review the stocks that I've recently discussed on the blog. The stocks in the watch list, the way that obviously we saw the market close today, but the way that I'd normally look at this is get the greatest percentage gains to the top, which we're not going to be able to do today because of the market being closed, but then arrange it in stocks that are under buy conditions, which will mean we'll get a certain way through and we'll see the switch from buy to sell. I'll highlight when that happens. These first few stocks that I cover are not under signals at the moment, but the SNAS, if you're not aware of, if you're looking for short exposure against the Nasdaq. This provides twice the exposure on the short side. We'll only build up that exposure if we start to see the Nasdaq trading below the 10-day average. This is the long side of that, the ultra long, so double long Nasdaq position. Venturex is a small copper explorer over in West Australia. I've added this to my list because of the calibre of director that joined the board, the ex-CEO of Northern Star. So following the merger of Saracen and Northern Star, the CEO of Northern Star put money into Venturex, and obviously, given his background and experience in the industry, I think it's a story there worth watching. So in my case, my level to enter this would really be some sort of retracement back down to around that 50-cent mark, and I'll draw your attention to that on the blog. Slightly more speculative and a little outside of obviously the area of the market that I'd normally focus on, which is predominantly the ASX 100, but interesting opportunity given that shift of position from the ex-Northern Star CEO. This is an ETF, high growth, and unless I saw significant value appear here, this is not something that I'm a buyer of, but in the months ahead, maybe even to the middle of next year, the cloud ETF is something that on an algorithm buy signal I'd take a look at. Likewise with the Van Eyck Vector Video Gaming Sports ETF, I think coming off the strength in this area of the market, following COVID lockdown globally, the valuations are probably a little stretched at the moment, but again, if we saw a deeper sell-off in the Nasdaq at some point, both of these ETFs that I've just covered there are something that I'd be happy to take a closer look at. Small companies ETF, what else we got here? The BetaShared Diversified All Growth, FTSE 100. So again, some of these are obviously just ideas that get dropped into a watch list. This is not meaning that all of these are on my radar as opportunities in the market now. I'll certainly point out the ones that I feel are as we go through them. Some of these are ideas that I've discussed with customers, and the members have put forward a stock and asked me to follow it, and I often will start that process by simply adding it into my watch list and then being more mindful of sort of any reading or research that I can come across for that particular company. So just moving through a couple of the so the fuel ETF, so that's just something that, again, we'll keep an eye on that in the coming months, as with the ETF battery tech and lithium ETF, a little expensive at the moment, but be interested to take a closer look at those on the next buy signal. Bega is a stock that I do hold, so I've added this into our portfolios. I'll take great interest in the upcoming earnings result in August, really to look at what the cost synergies and growth of the business look like post the recent acquisition, and looking for evidence that the company's growing earnings in high single digits. So from a shorter term perspective here, what we're thinking is that we've under algorithm buy signals, support's likely in place there at around that $5.65 low, and have just been accumulating the stock. Traders may wish to run a stop loss below that, but it is a fairly low volatility stock, and we'll review that position based on those fundamentals that come out in the August results. Pro Medicus is as I've discussed previously, it's a digital imaging company. They have contracts with 5 out of the 10 largest hospitals in America. They've won all 6 of the last contracts they've tendered for, and the stock is expensive. It's trading up near 100 times earnings, but it is a really high quality technology play within the medical space. If we look back at how it's performed following the algorithm signals, the signal back here in July last year, the stock rallied from that. It rallied again from the signal in November, and then the more recent one here in May, which we traded this again, as well as the one back here. But we added to the position here, and in most cases we've taken profit up here. It's had a 20% run, but continue to watch this one, and I'll draw your attention to any future algorithm buy signals in that. This Cure ETF, we remain overweight this. In some trading accounts, we've taken profit on it, but for the most part it remains our highest weighted position in our high conviction portfolio. The stock's rallied as I posted on the blog on Saturday. We've seen Biogen get FDA approval for the Alzheimer's drug that they've been in development, and that really helped to increase the beside Biogen rallying 60%, the broader sectors been getting a fair bit of buying support, and that's twofold. I think obviously the announcement of Biogen's helped, but also as the US interest rates, and that's a really important point to recognise what's going on in the market at the moment. Despite all the talk or fears of inflation picking up, you're actually seeing US interest rates back off from some of the recent highs a few weeks ago or a month or so back, which could just be the market forming a view that inflation is transitory, and that's obviously the Federal Reserve's view. But a more alarming conclusion could be that the market is fearing that corporate earnings are somewhere near a peak, and that's something that we need to really monitor there and continue to sort of look at that Nasdaq and the S&P 500 indexes and the average of those earnings that I often talk about. So in the upcoming results, which will be out in 4 weeks for the S&P 500, what we're looking for is at least the continuation of the average earnings tracking above $40. But so if we see a tapering off in that then ties in with the story with bond yields pulling back a little bit. But low bond yields help technology and growth stocks. Biotech's part of that trade. So we've seen this, what I think is an oversold level in this particular fund. We're now tracked from 60 up to 66. And I continue to like that for more patient, longer-term investors. BBUS, not doing there at the moment. That's a short side. Likewise, BBOS. SPY is the S&P 500 index, not doing there. 4D Medical, just draw your attention to this. It's I don't follow it closely yet, but again, it's in medical imaging. But not sure. This when I last looked at this, the balance sheet wasn't as strong as I would have liked to have seen, but it's probably overdue that I just review this company again, and I might try to do that this week and and add some commentary on the blog. The chart there looks a little interesting. ResMed, we obviously continue to like this. It's been under algorithm buy signals. If we have a look at the performance here, it's shifted from sell signals to buy signal in 2018, and it's continued to pick up these higher low formations, and the stock's performing well. A number of analysts remain pretty bullish there on the outlook for ResMed. Beacon Lighting switched from sell conditions to buy conditions, now pushing $2. That's performed very well. Sims Group likewise switched from sell to buy here at around $12, now pushing above 16. The Hack ETF, so we had this recently switched from sell conditions into buy conditions, obviously with the increased issues around cyber security. This is an area of the market that's unlikely to get into any kind of prolonged downtrend, and the thematic there for owning this ETF and buying it on any future algorithm signals, I'd suggest is a pretty strong opportunity for portfolios. The Global Growth Fund, just highlighting that it's switched from sell into buy conditions. Beta shares Nasdaq 100, so again under buy conditions. So for the moment, we still remain risk on with respect to the Nasdaq, but continue to watch it closely, and I might try to finish this evening just with a review of the Nasdaq. Meridian Energy under buy signals, so this has just been one that's been drawn to my attention. I've added it to the watch list, haven't done too much analysis on the fundamental side. Obviously just broadly within that energy sector, my preference has been Woodside Petroleum. In the case of Meridian, technically clearly you see some support there at around 460 and buying sort of building above that. Kogan, oversold maybe, down from $25 to $10. We haven't added any exposure in this, but it is under algorithm buy signals. I have posted on the blog regarding this at around this $10 level. We're just starting to see some buying interest build there, and a stabilisation. Again, interested in analysing the earnings there for Kogan when they come through. Woodside Petroleum, so we remain bullish on this, both from an investment standpoint and from trade. We're seeing oil back over $70. This pullback in Woodside from 24 down to the low 23s, you want to own it, and even if from a trading standpoint, owning it and running a stop loss below that 23.20 low, we'd expect Woodside to continue to move higher this week, given the strong backdrop for oil. This is a Van Eyck Vector World ex-Australia Quality ETF. So again, just highlighting the switch from sell conditions to buy there at 32, now pushing 37. This is one that I have spoken about on the blog and in prior recordings. So our preference, there's been three instruments: the IAA, which is the Asia Top 50, so this gives you broad exposure to the top 50 companies in Asia, predominantly blue chip companies there, cross of industry sector, slightly lower volatility than obviously the Tiger or the Asia Tech ETF that we've spoken about. But this here is under buy condition support at around this 110, now pushing up to 118. So this is the technology one, so the code on this is Asia. It's the Beta Shares Asia Technology Tiger ETF. Likewise, support here at around 1040. So support here at around 1040, the stock now pushing up towards 1144. Continue to like that, especially with the backdrop of low interest rates and the Nasdaq rallying a little at the moment. The OZR, which is the resource ETF, we've seen that switch from sell conditions to buy conditions. It's rallied from 1270 now up to around $14. Again, whether that resource trade is something you think about in the context of an ETF or owning Fortescue has obviously been another way of playing that. Cleanaway, I just pause and draw your attention to this. This is a recent algorithm buy signal that we had during the week. The fundamentals still remain very good for Cleanaway. We think it's got a long runway of being able to grow earnings. We've seen a takeover there from Suez Waste, some of their Australian assets. They never obviously got the full takeover acquisition they were looking for, but they were able to cherry pick some assets. buying Cleanaway on this dip is something to certainly have on your watch list. At the moment, the stock price is below the moving average. I'll draw your attention to this on the blog as I see the stock price move back above the average, but just highlighting there under algorithm buy signals, stochastic getting down into oversold levels, looking for that first sign of that moving higher, and maybe a more patient approach, just waiting for the price to get above that moving average. India, this India ETF, we've had this shift to algorithm buy signals here at around $49, now pushing up to $55, so that's performed very well. Sunrise Energy, this is just one high risk opportunity here, and we've seen this go through a recent name change. Uh, uh, Support may be down at around $2. The issue that the company has is they are burning through capital at a fairly rapid rate, and there's maybe some risks around the company needing to go back to the market. Again, I'll share with you a bit more detail on why I'm interested in Sunrise and why it's on the watch list via the blog during the week. So just skipping through a couple of these and looking at the ones that more, where there's a higher level of interest. The tech ETF, so this is global technology ETF, again just highlighting the switch from sell conditions into buy, and a more recent signal there at around 96, now pushing 104. Breville Group, so we've traded this off the recent algorithm buy signal. It's not really part of our core portfolio or a strong holding in the high conviction. So in a lot of cases, we bought it off that recent signal and have traded out of it up here near this $28 level, but that was one that made its way onto the watch list. SLF, I've been talking about this in prior week recordings. We've covered a lot about the REITs that have shifted to algorithm buy signals, and as an alternative to owning a portfolio of too many REITs, one of the solutions there that I put forward was owning the SLF, which is an ETF giving you broad-based exposure to the REIT sector. Since it switched to buy conditions there at around $11, it's now pushing up to $13.30. Still probably a little bit of more upside for that yet to go. Incitec Pivot, this is a trading opportunity to have a think about and watch more closely over the coming days. I think longer term fundamental or investors could hold Incitec on the basis that we should see a better second half earnings result than we had in the first half, and it may just be simply a case of holding the stock for the next 6 months to see that realised and announced to the market. For traders, and if you're taking a bit more of a shorter term focus on the market, owning the stock whilst it sits above this moving average, or even whilst it sits above the support there at around that $2 off this low here of around $2.37, you could place your stop loss below that. So again, just to backtrack and look at some of the setups here. Obviously, I like it given that fundamental backdrop, but from a pure technical standpoint, we had the algorithm buy signal, the green arrow. We're starting to see the stochastic move higher. The price is back above the moving average. We're able to take a support line, create a margin of safety for ourselves by saying, okay, whilst it stays above that, I'm long, and I set a stop loss below that. And that's the type of way you would manage a trade if you're just looking to be in the market for days or weeks, not necessarily months or years. PointsBet, again, not one that I've followed too closely as far as the fundamentals and the earnings growth, but they obviously are one of the more dominant companies listed on the ASX within the space, and we had it shift to algorithm buy signals there in May at around $11, now pushing up to $13. Zip, again, just draw your attention to this within the buy now, pay later space. We've seen Zip make an acquisition in Europe, which is fairly substantial. So we're now just monitoring this to see if we're in a position where we start to get support and a bit of a pickup in buying interest. The volume hasn't been anything particularly surprising, but certainly solid. So whilst it sits above the average, you can certainly, if that's something that you're looking for, opportunities within that buy now, pay later space. Fortescue, continue to like this. Think iron ore remains reasonably elevated for the time being. Not doing there. Vanguard, which is a really long-term investment exposure to global infrastructure. Low interest rates should benefit this, but do see that over time just continuing to climb higher. I'll skip through these next ones. Again, these are all just sort of a collective of ideas that make their way onto my watch list. I'll move through some of these. Gold Roads, preference at the moment is Northern Star. IZZ, even though this has switched from buy conditions into sell conditions, I'm maintaining exposure to this for the time being and obviously assessing that regularly, but continue to like thinking that China could be a little bit oversold from a valuation standpoint. CIMIC Group, looking at that from the perspective of owning call options into December, which limits the downside risk, but should be in an inflection point where we start to see CIMIC's balance sheet de-risked and earnings accelerate, and that should create the backdrop for CIMIC to trade up to around $30, I think. Amcor, probably tracking more sideways at the moment. Maybe a recovery in the US dollar helps Amcor a little, but the company did upgrade earnings into those high teens, or into the low teens. It was around 13-14% earnings growth, which is really attractive for a defensive business there. So we continue to monitor that, but just highlighting that it is under sell conditions. Insurance Australia, under sell conditions, but as I've discussed, potential recovery play in the market. Just skipping through a couple of these. Transurban, don't see a lot of downside risk there at the moment, but maybe bumping up against resistance. And there we are, back to the beginning. So I just want to share with you some of the stocks that have made their way onto my watch list. Next, to finish off tonight, I just want to go through the recent blog posts and make sure that if you haven't been reading the blog on a daily basis, you're at least aware of the stocks that we're focusing on. So again, the way I would normally view this is get the percentage gains to the top, which we're unable to do tonight because of the closed trading. We would get the buy signals to the top. I'll move through these. I'll draw your attention to when they shift from buy to sell. So let's just have a look at the stocks that are in our high conviction portfolio, and that either we're focusing on that we've bought over the recent weeks, or that they're on our hit list to add to portfolios. Cure ETF, as I mentioned earlier, remains a high conviction holding. TPG, the attraction here is I think the cash flow remains strong. There's cost synergies, and the market may have got too negative on TPG. So that from a trading standpoint, we've got this higher low structure as a change of trend here, and owning it. The post that I put on the blog a sort of week or so back really was about buying it at this level and running a stop loss either below that recent low there of sort of 508, or even a more cautious would be to run a stop loss, I should say, below the low there of $4.80. So for the time being, from a trading standpoint, we hold this stock. We've added to the exposure here, and we'll continue to do so as long as the price action stays above the moving average there, and that's been the theme of the threads that I've published on the blog there. Altium, we've seen them reject a takeover offer from Autodesk, which is a US technology company. The stock rallied. The yellow marker there means that on that day there was a blog post, and that blog post was just essentially saying that it's starting to look pretty good value down here at $24, and we've seen a material jump following that takeover offer. Appen Group, slightly higher risk because I don't think Appen's seen any evidence of a clear turnaround in earnings, but they have addressed the market and said sort of they're more focused on costs. They're reporting earnings in US dollars, and ever since doing that, we've seen the share price start moving marginally higher. But the risk sentiment here is still somewhat driven by the Nasdaq. So as long as we see those interest rates stay low and money flow back into growth stocks in the US, then Appen should be well supported. So for shorter term traders, you could certainly have a think about owning this with a stop loss below that low there, and that's been our approach to it from a shorter term perspective. Bega I already covered, we like that, and Breville, we like that, but in most cases we've taken profit on that as not really a core part of the portfolio. Ingham's, I just drew your attention to the algorithm buy signal here in Ingham's at around $3. The stock's now jumped $3.70. Incitec Pivot's one that we've now added into portfolios, both for traders and investors. The trader setup I just covered a moment ago. From an investor standpoint, we're just looking to see end to this sort of long-term downtrend, and from a fundamental standpoint, that change in trend should be supported by better second half earnings. Keener Securities, we've seen this under algorithm buy signals for the last couple of years, but the more recent signal here was at around this 94 level, and I just flagged that on the blog. Lendlease, long-term recovery, where we get the inflection point, whether it's 6 months or 12 months, but at $12 I start to think that Lendlease looks pretty good value relative to some of the other areas of the market that have rallied so hard. Macquarie now under buy conditions, so the two preferred financials are obviously CBA and Macquarie. They're the two that are under buy conditions. CBA could be getting a little expensive. Northern Star, we like this. This is our preferred gold stock. Even owning it on during the week there on that pullback to around 1050, still looking for that sort of support there to hold and a stronger uptrend to develop there in Northern Star. PointsBet, we covered that one earlier. Cube Holdings, we've seen freight volumes of so inbound freight with container ship volumes up 10% on the same time last year, and we've seen Cube rally from switching from sell conditions into buy conditions, and even sort of the more recent pullback where we've had these blog posts, just as a reminder, we're now pushing 320, so that's a stock that I hold both in the fund and in the high conviction portfolios. Treasury Wines has performed well after switching from sell conditions into buy conditions, maybe getting a little bit up near where I'd think is resistance at around $12. Woodside Petroleum I think is a buying opportunity. I continue to like that. Zero's rallied from that sort of 110 level, now pushing 130, but a high quality tech company, and happy to buy Zero on a pullback. Zip, if we're looking for something a little higher risk, but certainly in that buy now, pay later space. Switch from sell conditions into buy conditions, so we need that $6.30 support level to hold there. Car sales, so we've now gone into stocks that are under sell conditions. Car sales did the equity raising at around $17.50, I think, close to it, $600 odd million. The stock price sold off to reflect that slightly discounted raising. We've since seen it rally back to 19. The pattern that I'd be looking here to play out over the coming months in car sales would be a slight rally higher and then a pullback and a switch to buy conditions, and we'd certainly refocus on that. CIMIC I like as a sort of 6 to 12 month recovery play opportunity in the market. Insurance Australia, there's the potential for this to certainly trade back to around that 650 range in a normalised operating environment. So that's why I continue to sort of add this into the watch list and often sort of comment about it on the blog. These yellow markers show the recent commentary on the blog, but we could be looking at the start of sort of a more significant recovery there. IZZ continue to like that, and we hold that. On the short side of the market, maybe NAB and Westpac to me are a couple of ways to, but you really don't want to build up too much on the short side until you start to see the Nasdaq or any sort of significant weakness in the US, and obviously I'll draw your attention to that should we start to see that develop. Origin Energy was getting a little oversold, so these again are all stocks that are on the blog. So what we're doing now is within the watch list, you can come in here, select from these and go recent blog posts, and it stores the last 30 days of stocks that have been discussed on the blog, and that's what I'm doing at the moment, is toggling through these, and there we are back to Cure. So just just finish tonight with that Nasdaq, and just as a reminder of sort of the way we see sort of the risk sentiment of the market. So in the case of the Nasdaq, what we're looking at here is does this double top really mean anything? What's propelling this higher at the moment is that we're seeing that 10-year yield in the US and across the whole yield spectrum of the interest rate market. But if we just use that as our benchmark, we've seen that now pull back from sort of 1.7 down to 1.42, 1.43, maybe now sitting at about 1.45, 1.46. So what that means is that for all the fear of inflation picking up, the bond market's not signalling that it sees that as a concern. So the risk to keep an eye on there is, well, is the bond market more worried that we're going to see a peak in corporate earnings and a tapering off, which could be another explanation for those lower bond yields. So what's happening at the moment is, as those yields have eased back, money's pushed back into these growth names, and we've seen some of the tech stocks rally. So we'll just monitor how much runway that has. For the moment, you have to say it's bullish. The market is above the moving average, and there's certainly this support structure here to also just have a think about. But the first signal of some weakness, which I'll draw your attention to, will be if we see that Nasdaq back below that 10-day average. Thank